And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, fellow traders. It's time for the market forecast for Monday, October the 31st. It's Halloween. Hopefully you've got plenty of candy for the trick-or-treaters, or at least some for yourself, at least. I hope that you don't find my mask too scary. Maybe I'll take it off later. I've always been told I've got a perfect face for radio, so we've got some small economic numbers this morning. 8:45, the Chicago PMI. 9:30, the Dallas Manufacturing Survey. We're going to take a look at the week here, but we're going to remember what we do is try and accurately assess context. Always think about risk management and always remain patient in our trading. Again, happy Monday, happy Halloween, everyone. We've got a very busy week. As far as economic numbers this week, next week, there's a lot going on. Tomorrow we've got the FOMC meeting beginning. We've got PMI manufacturing, ISM manufacturing index, which could be kind of a big one. Construction spending and job opens and labor turnovers. We've got on Wednesday the ADP employment report, EIA petroleum status report, and the FOMC announcement, and the chair presser afterwards. It's going to be an interesting day on Wednesday, as always. Thursday, international trading goods and services, jobless claims, as always, on Thursday, productivity and cost, PMI composite final, factory orders, ISM service index, natural gas, all of that before 9:30 a.m. Central, and then another biggie on Friday with the unemployment situation, unemployment numbers. We used to call that unenjoyment on the trading floor. So we do have a busy week. Don't forget, we are in the midterms next Tuesday. We're all going to have to vote. Make sure you get out and vote. Make sure you vote. Make sure you vote. I'm going to be taking a couple of days off the end of this week and the beginning of next week. We're going to have Dan the Man Hodgman doing the forecast on Thursday and Friday and Monday. It's going to be interesting. It's going to be fun. I know we haven't seen Dan in quite a while. I know you'll be happy to see him again. And again, this coming Tuesday is voting day. You can probably go out and vote today if you want to. I know I'm going to vote on Thursday. And then going to be out of town for a couple of days. So I will be thinking about you. I will be missing you. And hopefully your trading will be good. As far as things I'm looking at, stock index futures slightly lower this morning. Cautiously lower is what I'm saying. As investors and traders ponder, hedge, and position for another 75 basis point rate hike, highly probable. The real question will come from the chairman afterwards. When will they start to slow some of these rate hikes? I know there's some hope in the markets right now that they're going to be able to slow these rate hikes relatively soon. We're going to all have to wait for those economic numbers and for those talking feds to make those decisions. We're halfway through earnings season. We've got the majority of the majors out. A few to watch this week. We have Eli Lilly tomorrow morning. We have CVS Wednesday morning. We have ConocoPhillips Thursday morning. But again, most of the majors are pretty much out there. Overall, mostly, maybe. Well, COVID lockdowns in China are largely being viewed as the cause of crude's break to the downside here this morning, down about $1 right now as we speak, buck 39, 1.5%. And Well, as always, here's the VIX. VIX is up 5% today, although it's only at 2703, so not a very high number, but a pretty good jump in it. A little bit of fear in the markets this morning as they continue to try and push lower. The dollar index up 0.5% at 111.24 last I checked. And the yield on the 10-year above 4.05%. We know rates are going to be going higher this week. So make sure that if you like what you're seeing, hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome. Here on the forecast recap, everything we do here. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. Today is group coaching at 12:30 today. It's moved up about a half an hour because we do have Make Hogue Money at 2 o'clock today. Recap will begin at 3:15 today. Little changes in some of the schedule. You can see that schedule at the top of our YouTube page if you're ever wondering where I am or what to look for. So, of course, if you do have things that you'd like to see, things that you think we could do better here on the forecast recap, anything we do, make sure you tell me, jhoagland@topstep.com. Always looking for feedback and ways to improve. So let me know. If you love it, tell everybody. If you don't love it, tell me. Good morning, everybody. Dark Kevin, first one in the room. You win the prize. Joel, Caprice, Shaw Cunningham, Master Roy, good morning, Dimitar. This morning I was having some internet issues. About 15 minutes before the forecast, I lost internet. I thought maybe there was a gremlin or some sort of goblin or some sort of ghost getting into my computers, but we are here. We are able to do this, so thank goodness for that. Jason Lewis, good morning. Glitter Sandwich, good morning. Dan Trader. My brother Rick, good morning. Love you. The rooster is here, growing as usual. It's always good. Bill Phillips is here. Rooster's going to be Foghorn Leghorn this year. He's a coop favorite. That's good. Everybody loves Foghorn Leghorn, right? I'll say you're doing it all wrong, son. Scott saw and he conquered. Jules, Serenity Trader, JD Royalty. Good morning, Dowitzer James. NASDAQ. Good morning, Theo. Mohand. Rob T. Candy Ticks. There you go. JD, it's good to see you, my friend. Steven, Anissa. Vince, happy Halloween to you, my friend. Trading Research, Mango Heist, good morning. Is credit spread viable for day trading futures? I mean, it's not something that we actively trade here. Sarah Hall, good morning. Prayers, love, Andy Butterfly this morning. Good to see you as always. Omid, Serenity Trader, Chicago. Vote early and vote often. That's right. That's another one of my dad's wisdoms, right? Trading Research, if you vote, you can't complain about the results. Remember that. Rusty Golfer, Unicus, good morning. And Unicus is quote for the day. Good morning, Monday morning. Sometimes magic is just someone spending more time on something than anyone else might reasonably expect. So, a famous golfer that said something similar to that. He said, the more I practice, the luckier I get. Sometimes magic is just someone spending more time on something than anyone might reasonably expect. The more you practice, the luckier you get, right? Marcelo, good morning. Ted, good morning. Mike, Backer, good morning. Second time on the live chat. We're glad you're here. Hopefully it's going to help. Let me know. Gary Severs, good morning. And Hagel Matters, good morning, everybody. Gary Player, that's right. That's who that was. I was thinking it was Lee Trevino, but that was Gary Player. Absolutely right, Rob T. All right, awesome. So we're going to jump into the charts and take a look at what we see here. Again, happy Halloween. Hopefully you're not finding my mask too scary. All right, let's jump into the E-mini S&Ps here and see what we're seeing. All right. So we got 2 weeks up after this Thursday excess. Man, I knew this excess was important on that day, and if you've been buying weakness, you've been doing pretty well, hopefully. The melt up Friday adds open interest. Volume kind of maintained. We added another 23,000 in open interest on this push to the upside. We're firmly above that 37.78 weekly kickoff high from last week. And looking, in short time frame, we're putting in higher highs. We're putting in higher lows. We got a little W bottom going here, don't we? There's so much pending information this week, including the FOMC, and next week with the midterm elections. Everybody seems to be talking about them and focused on them. We have to wait and see how these things come out and how the markets are going to respond to them. It just makes me think that having some sort of bias in the market in the next couple of weeks, while sometimes a bias can be good, sometimes it's going to be bad, I'm going to be very cautious not to have any kind of bias in these markets. I'm going to be looking for just what I see. What is the market saying? What is it attempting to do? How good of a job is it doing getting there? Take a look at the 30-minute chart here. No, that's not the right 30-minute chart here. Okay. If you remember, on Friday morning, Thursday we had put in a late spike. Friday morning we opened right at the low of that late spike, right at the base of it, and we rejected very quickly. The opening range was the low of the regular trading hour session all day on Friday. So not only did we reject lower pricing, we kind of opened bordering a gap. We accepted very quickly back inside value from Thursday, and before an hour, we had finished the value area special situation play and then continued this grind to the upside. There's been kind of a colloquialism on the trading floor for many, many years, and it is, you do not fade a melt up on a Friday. You don't fade it, and it turns out to be the exact right thing to do, because all you can do, it seems, when you get up here, you're thinking, well, where is the market going to turn? Well, it never really did. I mean, it just kind of one time framed and pushed higher and 8 shorts and pushed higher and 8 shorts and pushed higher and 8 shorts all day long, finally finishing after the regular trading hours all the way up here, leaving, guess what? Another late spike. The base of that late spike is 39.1375. Right about here, right about the high from, well, this is the high from last week, so this should go up here, right around high of value. Well, what are we doing now? We seem to be rejecting those higher pricing. We do have some overnight inventory to the short side. There's no chance for a gap. Well, there's always a chance. Anything, as we always say, can happen. ACH, anything can happen. However, it's highly unlikely that we're going to be opening with a gap, which kind of puts us in potential repair from Friday. High volume node, opening between them in value. I'm thinking that there is a high probability of range-bound trade between one or two of these high volume nodes from Friday. And that's what I'm going to do. I'm going to stay patient. I'm going to look for better trade locations as the day goes on. I don't think my mouth is really working all that well yet. So that's kind of my primary hypothesis today. is maybe a bias to the short side. Remember, I just said I'm not going to have a bias, but I've got a nuance that says we're rejecting this higher level. So if we get a chance up here near point of control settlement, which is 39.11 quarter, this might be an interesting opportunity for me. It's going to be better trade location than the middle of value. That I can tell you. I'm going to be looking for opportunities to limit risk. Limit risk. And right in the middle of value from yesterday, Friday, I should say, doesn't limit my risk. So again, my main hypothesis is stay patient, look for opportunities as the day goes on. Maybe the market's going to open, give us a nice initial balance or the first hour of trade, and we'd work those extremes. It just seems like what I'm seeing is going to provide better trade locations as the day goes on. Boy, that was a lot of yakking. 801. So now we're open. So we have similar. This is still even the S&Ps here. Let's look at crude oil now. Hello. All right. Open interest rose on Friday, but at a slower pace. We'd had some pretty decent open interest increases on the way up here. Really not getting all that much momentum. We went from 4 dojis to 2 dojis or spinning tops up here. Very indecisive market for several days and at different times here. Slowing Chinese demand apparently is creating what I'm calling it kind of falling into some sort of a balance. We had a breakout of this coiling area. It did not necessarily bring big momentum for days and days. It kind of killed it last week when the Chinese started locking down again, which, I don't want more expensive crude oil and gasoline. I don't think anybody does. So we're still, we have the API, EIA, we have FOMC, we have elections. There's still, a lot of uncertainty in any of these markets. So again, I'm going to just point out that we want to trade what we see. We don't really want any real biases to get in front of us to push us to do something that would be probably not in our best interest. So this is the 30-minute chart. We've got a head and shoulders. We've got a neckline that I've put here. The neckline, the extension from the top of the head to the neckline, and then from the neckline down takes us down through weekly kickoff low, which I've got here at 85 even, big fat round number. We've got a lot of overnight shorts and a gap open here. Okay, if we can't close this gap, I'm looking for this market with no new information to technically give us a move down to weekly kickoff low. There's a naked point of control down there. There is another naked point of control and a TPO naked point of control right around 85 even, and our measured move takes us even through that. So as we can't close the gap relatively early, I'm looking for opportunities to sell strength off this technical move and a little bit of fundamental information coming out of China. Here's the NASDAQ. NASDAQ looks far more range-bound than the S&Ps, doesn't it? Although we did put up 2 solid up weeks, we lost open interest on this move to the upside. Okay. Volume is inert. Open interest is inert. We lost 900 contracts on Friday on this melt to the upside. It doesn't seem to make sense, does it? It doesn't make sense. It's unclear. And if it's unclear, I'm not trading it until it's clear. Or at least giving me something kind of clear. Now, we have a similar situation. We have the late spike. The base of the late spike is 11,587.75. We've got settlement up here, which is 11,587. That's the base of the late spike, isn't it? So if we have overnight inventory that takes us to the base of the late spike, it takes us to a high volume node. If we can't continue, if we can't take out the high and continue to move higher. Then we start to rotate back down to point of control, which is another high volume node for repair. We are opening in repair between two high volume nodes. Be patient. Wait. Let the market establish some early ranges and work those early ranges to limit risk. Gold. Well, we ended up, it was a bear flag, it looks like now, with greater certainty, although volume was continuing to rise during this bear flag. And we added, on Friday, we broke out below and we added 7,400 in new business. It brought in new business. So I think our target for this move off of this bear flag is going to be largely weekly kickoff low, 1620 even. Keep your eye on the dollar, of course. Dollar's up a little bit this morning, but that, of course, can change on us. So keep an eye on the dollar. Here's the 30. So if this were a head and shoulders, we're getting pretty close to the completion of the head and shoulders. Looking at it as a bear flag, that takes us down to weekly kickoff low. We closed any gaps, but right now it seems as though that gap close may be somewhat resistant. We also have last week's low right here, which may also give us opportunity to limit risk. Again, watch the dollar. Have some overnight inventory to the short side. Watch the dollar. And for the euro, well, big up, big down. We had 1 day close above our previous weekly kickoff high, which was 10020. We've got another naked point of control up here that lines up very nicely with these two levels. So this is our new weekly kickoff high. We're coming off. We're in the middle. We have lots of information on both sides of this market. We've got weekly kickoff, last week high, weekly kickoff low, last week's low. Look at this on the 30-minute chart. Naked point of control, naked point of control. Weekly kickoff high, last week's high, weekly kickoff low, last week's low, another naked point of control, and we're in the middle. Do we have a gap here? I don't think that we did necessarily leave any kind of gap. So our gap in the euro looks like it was resistant. Maybe we're going to see some resistance there in gold as well. One thing, Thursday. Hang on a second. Yeah, the Bank of England is due to cut rates on Thursday. They're talking about a 75 basis point rate cut in England, which may have some effect here on the euro. So looking for the traders, investors, and those that are interested in the currencies, the British pound, the euro, to be preparing and protecting themselves for, of course, the FOMC on Wednesday, but the Bank of England increasing rates on Thursday as well. So we're just looking for short time frame levels with which to be able to limit our risk, and there's lots of them. Friday's point of control, which I didn't put up here. The Thursday's point of control. We got point of control. There's short time frame targets all over the place. Try and stay patient. 10-year. So the 10-year, we got our breakout, and now is looking more like a bear flag. We know rates are going higher. We lost 31,000 in open interest on this push off the high here. Let me see here. Yeah, that was weekly kickoff last week. Still weekly kickoff this week. Right to it, tested it twice, now turning the other direction. centrally located in last week's range. A little profit taking from Friday. Take a look at the 30-minute chart. These markets are going to be settling in for, I think, a little bit of a early, a mid-fall nap, because they're just going to be waiting for what's going to happen. Here's our bear flag. If we do see some continuation, most of the visuals that we see in the 10-year are to the downside. We've got a small gap that we left last week. We've got a naked point of control down here. We've got, last week's high, weekly kickoff high, and a naked point of control up here as well as here. But we are smack dab in the middle. Do we have a gap? Do we not have a gap? It looks like so far we're still holding a bit of a gap. So we have to see. And for the natural gas, here, let's take a quick look. So we had our measured move right off of the head and shoulders. We had a weekly kickoff level that moved down pretty significantly, and we've got 2,700 additional open interest down here. It seems as though there may be a community of traders that are trapped down there. We got our weekly kickoff low in play here already this week. The measured move, continuation, range bound. I'm looking at this as weekly kickoff high is the extreme of the range. Got an extreme of the range down here. Take a look at the 30. Big gap. Up above weekly kickoff high. Supportive. If it's not supportive, we may see the market pull back. We got a lot of overnight longs here. So we certainly have our tasks set forth. Remember, trade what you see. And don't let what you see scare you. Happy Halloween. Let's take our deep breath. Get out there and profit today. Take your time. Be patient. And have a good trading day. I'll look forward to seeing you all for group coaching, Make Hope Money, and the recap today. Right? Who loves you? I do. Aren't you lucky? Trade well, everyone. We'll see you later.